Welcome back. Now time to talk to Patrick Morris. He is Senior Managing Partner at Hagen Capital here in New York City. Mr. Morris, always nice to see you. Thank you for joining us.
You're very welcome.
First, your thoughts on India and the Indian markets before we get to your thoughts on what's happening on Wall Street these days. This sugar price rise, you say, is something that is taking your attention, and you actually called it a sugar commodity crisis. Do you think the impact is going to be that severe?
Well, I think, it's a massive reversal from what we've seen in previous years. Globally, there was sort of too much sugar. Now there's too little. And historically, the Indian market for sugar had sort of been kind of a common man or poor man's kind of commodity. It's always been in great excess in India, and now it's sort of in short supply. The Indian government's not going to be able to defend prices and keep them at reasonable levels. So, yeah, I think it's a bit of a crisis. It's very good if you're producing sugar, but not so good if you're consuming it.
Okay, now we've got the drought, the failing monsoon or the failed monsoon. What sort of an impact does that have on overall growth in your view?
Well, obviously, anytime you have a failure of the environment, you have an enormous crisis, possibly. The monsoon's not over, but obviously it's been disappointing. So you'll see continued pressure on agricultural prices. So right across the board, it's just going to be a little more expensive for people in India to give themselves sort of the day-to-day needs. And that I think could put pressure on the government, and obviously is something that they have to be very concerned about.
Okay, now do your investment themes, what you like, what is attractive to you? You've often told us about the power sector, infrastructure, rural development. Does that still hold?
Well, we had talked a few weeks ago, maybe a month ago, about energy prices. Obviously, energy prices have rallied pretty strongly. I think they're going to kind of stall where they are right now. So, infrastructure is kind of the next play. So, electricity, you mentioned 3G just a minute ago, but really it's the basic infrastructure. It's energy, it's roads, it's, fresh, clean water. Those are the things that I think you can really rely on as being long-term investments.
Is education another long-term basic need?
Well, I think when you have a country the size of India, education is not just a long-term, good investment idea, but it's just a good idea in general, because a well-educated population is one that can grow into something that, is sort of an investment for the future. That's really where India needs to focus.
Okay. In your note this morning, you said that it's a positive trend. You've noticed that Chinese investment in India is growing, and that you see as a positive trend going ahead. Tell me why.
Well, I think all foreign investment in India is a positive trend. I think that Chinese investment into India, it's just another resource. You're not relying on Western Europe and the United States exclusively for investment. Obviously, the story of China of the last 10, 20 years has been phenomenal, and that they're investing in India, I think, is a very strong sign that they see good, strong growth potential in India.
Okay. As far as what's happening now on Wall Street, do you think this rally is taking a break here? Do you think there's a little more wariness in the markets?
Well, I think it's obviously taking a break. What people were talking about just a week or 2 weeks ago was that there's this enormous amount of money on the sidelines in the market, and it's going to be in a big rush to get in. I think the consensus right across the board was big rally into the end of the year. I think we will see that rally into the end of the year, certainly as people try to get money to work. It's been actually a pretty good year for equities in the U.S. so far, but I do think you have to remember that every once in a while it is going to take a break, and we are at the end of August, and it's a very slow time. People actually still go on vacation.
So do you think corrections are just a necessary evil? Are they really necessary?
Maybe they're not corrections. Maybe they're consolidations. Correction, I'd say, if we're down 10% or we're down 15%, you've got a really good correction. Markets have been volatile all year. They've been volatile all of the last 2 years. So I think this has been, pretty modest. It's not particularly scary to me right here.
Okay. But do you think, because yesterday that decline we saw, it seems like it was for no apparent reason. People were really struggling to give us a real fundamental reason for that much of a decline. And what would you say it was because of?
Well, again, it's fairly thin volume. It's fairly late in the summer. You have to really get to the other side of Labor Day before I think you really want to be looking too closely at these types of trends. One thing that I think that you do want to be aware of is when you see the market take those big declines, you really have to think, is this really big institutional selling, or is this just profit taking? We've had a heck of a rally, and I'm not really sure that we've seen the fundamentals follow through on enough companies. You've seen earnings, but we're not seeing, great earnings or great revenue growth. We're just starting from such a low base, they look pretty good. So until you start to see some momentum, quarter over quarter, positive earnings surprises, revenue surprises, widening of margins, I think those are things that really will drive the market higher.
Okay, what about all the positive data surprises, or perhaps just, the trend of it getting better? Do you think that the market's expectations now have become for this economic data to actually get better, not just less bad? They actually want to see huge improvements, and is it too soon to expect that?
Well, the number that I would really mostly there's maybe three things to really be concerned about. One, we still haven't seen this commercial real estate bubble either deflate or it just sort of went away. People stopped talking about it. Two is jobs. We're not creating a lot of new jobs. And three is you really need to see, people spending at the retail level pretty aggressively. We're really not a manufacturing country. We're not an industrial manufacturing country anymore. We're all driven off the consumer. So the consumer needs to get new jobs, get better jobs, and start spending.
Okay. One final question. How much does Wall Street, do you think Wall Street is shrugging off what happens at the Chinese markets these days?
It's really hard to know. That was a very wicked move we saw in the Chinese markets. Again, I think a lot of the emerging markets have been up so much in the last few months that I think it's very logical that any disappointment, any questions at all would create pretty wicked sell-offs. Money's moving very quickly these days. I don't think people have a tremendous amount of confidence in their investment themes. So with a lot of short-term trading, with a little bit of disappointing news, with concerns about, local economies, you're going to see some pretty nasty moves in some of the emerging markets, I think.
Okay, well, on that note, thank you so much for joining us. That's all the time we have today, but we'll see you again soon. Thanks for your time. Well, that is